Hi, everybody, and welcome to this week's chapter, Chapter 8. We're going to talk about losses and bad debts. This is the last chapter before our second exam. The first thing this chapter talks about is identifying the types of transactions that are losses. There are various types of losses that you'll read about, and you'll see that choosing where they fit can make a big difference. You have to determine the declassification of the loss. That means what type of loss is it? Is it capital loss? Is it ordinary loss, etc.? We're going to talk a little bit about the tax treatment for passive losses. You'll read what those rules are for when an activity is passive versus non-passive. And you'll see from the chapter that this is quite a bit of a confusing topic and has a lot of detail, more than this class actually goes into. We'll figure out how to figure out if something is a casualty loss, how to determine if it is a casualty loss, and how to actually calculate it. Compute the deduction for bad debt, which is different. The rules have changed over the years. Used to be very similar to generally accepted accounting principles, where you would have an allowance for bad debts. But now, under current rules, there is no more allowance. So you have to figure bad debts for each account separately, and then you have to figure out whether it's a business bad debt or a non-business bad debt, because the treatment is different. This chapter will also discuss net operating loss deductions for corporations and individuals, and how to use them, and if you have excess, what the rules are for carrying them over. We'll talk about some income tax planning, as well as compliance and how to use the forms. That's it for this week. If you have any questions, I'll be available on Wednesday from 7 to 9. Send me an email if you can attend the office hours. If not, send me an email or a text, and we can set up something separately.